Good morning, everyone. Welcome to our Tuesdays Master Tactics. First of all, sorry about last Tuesday. We had a lot of difficulty this is too complicated for me. The stream jar, everything that we're doing is new. So we are trying to have it as perfect as we can. Okay. So we're working on it. Today, I have very super great, important guests. One of them is Mario Silva, is our own CPA at Brokers LLC, and he handles all my stuff, my real estate things, and including the companies. And the other super guest is my guest from last Tuesday, Monica, that we're going to talk about EB-5. Okay. We're going to talk about EB-5, and we're going to talk about an excellent project that we're handling on EB-5 that is already approved. And with Mario, we will be talking about tax planning for real estate agents. We are in the season, and definitely we need to learn so many things about how we can work out the system in a good way, obviously, to get better insight what is the best thing to do for real estate agents when we talk about taxes. So, welcome, Mario.
Yeah.
Julieta. Hey, Mario, how are you?
Good morning, Claudia. I'm very good. Thank you. Thank you for inviting me.
No, it's a pleasure. Okay, everyone, I'm going to start asking the questions that we all want to know about Mario. Mario, can you please introduce yourself a little bit about your experience and expertise and how many years you've been doing this for real estate industry and many other industries, of course.
Oh, yeah, I've been a CPA for the past 25 years.
Oh my God.
So
Okay.
I've been doing taxes maybe a good 20 years. So I've been involved in the industry. I have my own practice. As you know, I have different clients from different industries, and we do mainly tax work. So it's like an everyday thing for us.
Great. Perfect. So, first question, and the most important question that I think every real estate agent should know: why we should incorporate, why I shouldn't be Claudia Serna doing my sales, my real estate commissions as Claudia Serna, and why should I do it as a Claudia Serna PA or Claudia Serna LLC under Federal Real Estate Commission, obviously.
Well, incorporating is a good thing as far as from a legal standpoint. Registering a company allows you some legal protection that you don't get when you're self-employed, especially when you're dealing with your own assets. So it allows for legal protection, and it helps you, get better deductions when it comes to the tax code. So in a nutshell, it allows for access of real estates to get a lot better deductions and to be able to access the code. And sometimes when you're self-employed and you declare all your deductions at a personal level on a 1040 return, you may be right, and you may have a lot of deductions that will draw attention and sometimes can trigger an audit, as opposed to when you register your own company. You have access not only to deduct a lot more things, and you're also able to limit certain taxes like self-employment tax, which is a FICA tax. And you can also have access to treat each individual activity and be able to keep track and log certain specific items, for example.
Expenses.
Yeah, certain
Okay.
benefits like the real estate tax professional status, which is important for real estate agents and people that are involved in the real estate business. So it allows you to track and keep log and be able to better differentiate that information, so that if you ever audit it, you're better able and you're better prepared to confront these situations.
Okay, just so to summarize, the best thing to do when we're real estate agents is become a PA or LLC, which means that you are incorporating yourself as a corporation. That means that first you are protecting your personal assets from any liabilities, right? Let's say we made a mistake, guys. We made mistakes many times that we don't even know that we're making the mistakes, and we are so liable when we are on the real estate industry out there. And if we have our personal stuff um, protected from our practice, that is going to give us a better protection again, right? So they can come to the LLC, they can come and sue the PA, but it's difficult to pierce that veil when you have the LLC or the PA to go after the personal stuff. Correct, Mario?
Correct.
Okay. And the second one is that we are going to have many ways to deduct many more things that if we are closing real estate commissions under the personal level. One of them is that when you have an LLC like or a PA like mine, I'm Claudia Serna PA. When I receive commissions when I'm selling real estate, they go to my PA. Remember that becoming a PA is not calling the office and saying, hey, I just registered as a PA or LLC. We also have to register that PA or LLC under the Federal Real Estate Commission with the real estate license number that we have. That's the way to do it. It's not only becoming a PA and now I'm Pepita Perez PA. No, we have to register, okay? That's why when we have a PA or LLC, it couldn't be in a different name than the name that we have in our real estate license. Okay. And then we can become employees of our own PA or LLC. Is that correct, Mario?
Yes, you can become an employee, which allows for certain benefits
Better
like retirement
deductions, right?
planning if you can't, and being able to defer some income in the future. So yes.
So give me just one example of, let's say, if I am not incorporated,
So
how
the
much
most
money
important
I am.
one
Uh-huh,
would be the self-employment tax, especially when you
exactly.
are starting up. If you are a self-employed individual, which means you basically do business with your license under your name and your social security number. Let's say after expenses, your net income for the business was $50,000. Okay, this is after all expenses being deducted from your commissions. That $50,000 will generate an additional self-employment tax on your personal returns, which is about 15.3%, which is the FICA tax in the United States. It's about $7,650. Now, there is no way to deduct that. There is no way to minimize that other than including more expenses. So on your personal return, you will have an additional tax, and this is on top of income tax of $7,650. Now let's assume the same example, and you are incorporated and you have your own company. So now maybe part of your expenses, and one of the reasons on a corporation is you have to have reasonable compensation. So this reasonable compensation means, yes, I need to pay some self-employment tax, but it has to be reasonable to what I do or the amount of time that I can include. So let's assume that instead of you paying taxes on $50,000, you set up yourself a payroll, or you pay yourself a salary of $30,000. So this $30,000 will pay self-employment tax of about $4,590, and which means a net savings of $3,000. So that's one
Okay.
of the
Yeah.
examples where you can actually save some money while complying with the code and the law.
Great. That's what I love about my master tactics. We always give real examples of how we can implement the things that we're talking about. Guys, in my own personal thing, what I do is I have myself as an employee, I pay myself $30,000 or $36,000 a year. I pay self employment tax based on my salary, and I don't have to pay the self employment tax based on all the amount of commissions received under my name, under that corporation. So it's very important. There are many things that we can take advantage of when we incorporate, plus the security and the liability that we are saving ourselves too. Okay. Thank you, Mario. I have another question. Since we receive everything and we don't have deductions on our commissions, can you please explain to me the best way that you can tell the real estate agents how to put money aside when we receive our gross income? So by the end of the year that we have to go and present taxes, this is not going to be like, oh my God, where am I going to get that money from?
I guess the best way to do it is you have it really there is a lot of questions because it depends on brackets and what other income, if you are married or you have dependents, and their income as well. So there is no a right answer. I guess what I try to tell people is do at least 15. If you have a spouse that is that makes some income and it's greater than what you make, I think you are better off saving 15% of your gross
Yeah.
if you want to
Mhm.
be on the safe side, if you want to be conservative. If your spouse is not, you know, maybe has the same amount of income as you do, or you guys are in the same range, then I would say, okay, save at least 10% of your gross commissions so that come year end, you're better prepared to deal with the tax liability. The reality is that there will be a tax because none of your
Okay.
income has paid any taxes, or no withholdings have been done on your income. So it's very likely that you will end up paying something at the end. So it's always good to keep that in mind. If you're single, do 15%. If you're single and you have no kids, you pay more
So
taxes.
it's better to get married.
Well, it's for some things it is. Yes.
No, I don't know what's gonna be more expensive at the end.
Yeah, exactly. Yes. That's another.
Yeah, I know. So, but to be on the safe side, everyone, open a savings account from every check that you get, put 15% aside. Maybe at the end of the year, you have some savings, but at the end of the year, for sure, you're not gonna be like a slump with a big amount of money that you're not gonna know where to get it from because you are spending everything.
Right.
So to be on the safe side, just put 15% aside. Just put 15% aside, okay? And I don't know if some of you want to get married, you can do it too to be safe, but I don't know. Okay, another question that I have here. Is there anything new lately? Any recent changes in tax law that real estate agents should be aware, or how they implement, or this has been mostly the same for years and years for us? What are the standard deductions that we should be aware of?
Well, it's like I tell all clients, remember there are no real standard deductions. The law, the tax code is very specific. You can deduct anything that you can argue relates to your income. Meaning, if I can argue that this expense will help me generate additional income, then I'm entitled to the deduction. Okay, there may be some limits on the deduction. For example, if I'm taking a client out for a meal, I may not necessarily get 100% of the meal, but I get 50% of the meal deduction. Many things that many real estate agents and people who are starting don't know is in order for us to deduct these meals, you do need the receipts. And And what I tell clients is you just get in the habit of saving those receipts. I know it's a lot of work sometimes, but what it helps is if you ever have to prove the expense, if you don't have the receipt, you're not going to be able to prove it. So so meals is an example of something that, okay, I take someone who is maybe a friend, is a prospective client, and we're having a meal or a lunch and we end up talking about a referral or a possible referral. Does that make it deductible? Well, yes, it's going to help me generate my income, right? So real estate agents have a lot of sort of lineage. Entertainment is one where unfortunately it no longer applies for a lot of industries. So it's not like sometimes I get asked if I take out my client on a boat or if I take them to a club, if I could do that, if I do gifts. It does help, but it doesn't help as much. That's something that changed with the last change in the law that there was in 2017. But anything that you could argue, some of your clothing, you have to be presentable if you're showing a house, and if you're showing you're not gonna go dress with jeans. You might dress well, and you have to be presentable in a certain way. So a portion of that, it's something that can be deducted. You cannot
Even the
really
dry
argue
clean receipts, even the dry cleaners
even the
receipts.
dry cleaners.
Yeah.
The idea
Uh-huh.
is the idea is the law says you have to be reasonable. So reasonable means there's gotta be some personal element to it. You cannot deduct all of the dry cleaning because you cannot really say all of it is for business. But you can deduct a large portion of it. And the key to any deduction, which I think is the most important thing for many people, is documenting it. If I can, because most of it comes down to documents. See, a lot of people think it's just a matter of me. I go and it's in the bank statement. I pay for it with my credit card, so it's there. And sometimes certain deductions when it comes to the auditor, because really, it all comes down to an audit. If I never get audited, then I'm fine. But if I ever get audited, then I have to prove that I had this deduction. So a lot of times people fail in that aspect here. Getting used to documenting it could be maybe you bought an iPad. It was an iPad for your daughter, but you kept the receipt. And if you kept the receipt and then you use it, you happen to use it a lot of times, and then it turns out that she didn't like it and you kept it. Well, now that iPad can be a deduction for you because you're using it
Yeah.
on the business and you're taking it out. Same things with the cars, downloading those apps that track your mileage. They're very important right now. So what I tell
Yeah,
us,
that's what Notice is asking right now.
every time you get into the car, just you're going to the gym. Well, no, I'm going business because I may meet someone. So it's a matter of knowing how to present and how to document the deduction and how to argue that it helps me. So that's the reasonableness. Can a real estate agent deduct medical books? Well, not really, right? There's no
Really.
argument
Yeah.
as to why would I have a medical book for my
Yeah.
same thing with can I deduct the college tuition of my kids? Well, not really. There is no way to argue that. There's no real way.
What about the little office that many of us have at home?
Home offices are tricky. If you have a house and you have a mortgage, you can. It usually has to be a specific room, and the reality of it is it's not really home office is not. I have a two-bedroom apartment, and the two of I live in one, and then in the other one my kids live there. So it's like it has to be an individual room. It has to be for office business purposes, or at least you have to make it seem like it is. And then you get the deduction of the square footage. So if the house is 1,400 square footage and the room it's only 150, you get that percentage of deduction. So sometimes it's not even worth it because then you get into different aspects of it. I would say that when it comes, that's the case. If you're renting it out and you have a specific room, because that's the key. It has to be a specific room. I know many people put
Okay.
it, but the idea is that it has to be a specific room. So I tell people, well, you gotta make sure that whatever room it is, at some point, if we're gonna use it, You're gonna have to make it seem like an office. Okay, so there cannot be a bed in there. There cannot
Yeah.
be anything that resembles an aspect of personal living. There has to be an office and a space where you
Yeah.
don't have any other. Correct.
The, the key is to make sense.
Correct. Right.
The key is to make sense, like everything. Guys, don't go on the tickets to go to Disney. It's not, it doesn't go with the business unless you are taking a client there and you have to prove many more things. But let's try to be as common sense as possible and keep the receipts for everything.
Yeah,
That's the best way to do it.
that's the
Okay.
best way. Correct.
Okay. Are there any specialized tax planning consideration for real estate agents who own rental properties? That will be my last question for you.
Real estate. I'm sorry.
Uh, uh, some of us, we own real estate properties for rental. Should we open a different LLC for it, right? And do not mix it with the real estate company that we have for commissions?
Well, like we said, it all comes down to when it comes to real estate professionals. So there is in terms of liability, of course, it really depends on you. I mean, some people don't want the hassle and they just own the houses under their name because you gotta measure the risk against the cost. So as much as it's gonna cost me to maintain the company to do all this when it's only one rental, and what is really the potential liability, right? Can the roof of a condo fall on the tenant and will he sue me? So that's a very unlikely scenario, and that's how we would measure the need for that. Now there are, if you ask a lawyer will always tell you to open an LLC and keep
Yeah,
it.
definitely.
The things with LLCs is that you open the LLC and you could be the only owner of the LLC, and then you don't have to really do a separate return for that, and it will provide you legal protection as long as you treat the LLC as a separate entity for you. What
See,
many people do
exactly.
is that they open these LLCs with the rentals and then they never open a bank account for that LLC. They just simply do everything under their personal accounts. When you do that, you lose that protection. So you're basically, if anything ever happens, and then you want to avail yourself from the protection of
You're
the
mixing
LLC,
it.
you're going to
Exactly.
lose it. So that's something to keep in mind. So as far as legal protection, always a company will do that from the standpoint of protecting yourself or protecting other assets. When something happens to these particular assets. So that comes with that. Now, when it comes to um, separating that and tax planning when it comes to that, well, if you have different activities and you can join them together for tax purposes so that you can be considered a real estate professional. And remember, a real estate professional is someone that spends on every activity more than 750 hours. What's a real estate professional in a nutshell is someone that really basically all of their life is the right is it's this. Now a
It
real estate,
applies to us. We work 24/7.
right, a real estate, sometimes
Exactly.
it's confusing because a real estate agent, you may think you spend that much time, but sometimes you may not. So what a real estate professional definition for the tax code allows you to do is sometimes all these rentals generate losses in the beginning. And so these losses are something that you could use to offset your income. On a regular
Yeah.
scenario, when I'm not a real estate professional, I am limited to using those losses against my commission income. I wouldn't be able to use it. When I'm considered a real estate professional, I'm able to offset some of those losses with my commission income, which is a
Yeah, because
very
everything
nice.
goes to the top, right? Like my LLCs are here, some are losing, some are winning, and everything goes up to my
Think of
name,
it
and
this way:
then
if I'm a regular me, I may
uh-huh.
have a couple rental homes. I'm losing money of them, but if my income is above certain level, I cannot use those losses to offset my income. So basically, I gotta end up paying taxes, and the losses are just part. Whenever I sell those, I'll be able to use them. But in the meantime, I can use them. The best example is, Trump. Whenever you saw those real estate, those tax returns that came out at some point and said, he only paid $3 of tax. Well, that's what he does. He's considered a real estate professional. So he may have income from different sources, and then he has those losses generated by his losses on real estate. Because he's considered a real estate professional, he's allowed to offset those losses with the income, thus not paying tax. But in order to
Wow.
do that, you have to achieve that status with the IRS. It's not like something you apply for. It's just something that you keep
And
in mind.
demonstrate.
And when you start spending 750 hours on an activity, and then you have to obviously document that and all that. But that would be some of the advantages that you have when you have rental properties, and you want to use some of the losses and the things that you can do to mitigate your commission income. So because you invested on something, it lost money, and you want to be able to use that. So
Okay, great. Super. That's very good insight. Carol or Mario, can you please put your phone number, your email, and the company's name so everybody can see it on the screen? So if anybody needs personal recommended, they manage my own taxes, that they're not easy, right? Sometimes I have too many things going on at the same time. What's the difference between a PA and LLC, Zach? Do you have any differences on taxes purposes? I have a question here between a PA and LLC, or is just
no, a PA is a personal corporation. So personal corporations, unless you turn them into an S corporation, which is something different, but a personal corporation by default will pay 35% tax on your income. You don't want to be a simple PA. You always want to be a PA, but converted into an S corp, or being treated for tax purposes as an S corporation. So if you're going to be a PA, you always want to make sure, especially if you're starting, you want to be an S corporation. You want to file. You want to tell whoever is doing it to file for an S corp. That's what you want to do. You don't want to be a PA regular and be like that, because that's a corporation, and then you get into different aspects of the tax code, and it's not really the best way to do taxes. An LLC is different. An LLC, it's like a child that can pick different apples. You can be treated as a corporation for tax purposes. You can be treated as a sole proprietor. You could be treated as a S corp. You could be treated as a partnership. So an LLC, it's great because it gives you flexibility. So I say nowadays, many people, and I tell my clients all the time, don't do PA, just do Claudia Serna LLC, right? Don't do Claudia Serna PA. It used to be used a lot. It had some advantages for certain industries. For a real estate agent that's just starting and maybe selling and having
so.
commissions, I think it
What
it
about in
should
my
be.
what about in my case? Should we change mine? I'm a PA.
Well, no, you had it open and you're an S corporation for tax purposes.
Yeah,
Like I
exactly.
said,
I'm an
you
S
can be a
corporation.
PA, but as long as you file for the S corp status, you're fine.
I'm okay.
The
Okay,
LLC,
perfect.
what the
So,
LLC allows is for more flexibility if you need to change.
okay, we need Mario's information. Can somebody put it on the board, please? So
Where
agents
do I
can
put
contact his,
my stuff in the private chat?
uh, yeah, it's right there on the chat.
I put it in the chat.
Or if you want to give it to me, I can write it down. Do you see the chat?
I see it. Yeah. Okay.
Okay, perfect. Yeah, Silva's Financial Services. Perfect. Guys, personal recommended. Mario, last question that I ask all my guests. If you could have a superpower, what would it be?
My superpower.
Yeah. If you could have one, what would it be?
be able to take endless vacations during April and the 15th.
Okay, that's a good one. You are in the
Yeah.
middle of your season, Mario. It was a pleasure having you in our Master Tactics, all our agents, inside brokers, and outside. That we have many watching us and listening to us today. Really appreciate everything that you've done today and everything you teach, especially me every day and everyone. And we hope you can come sooner, guys. Personally recommend Silva's accounting. All the information is on the board. So thank you, Mario.
Oh, no, thank you, Claudia, for the opportunity.
Okay, thank you.
Bye. Thank you.
Moni, bye. Thank you. So let's talk about with one of my girls, Monica. Monica, come to the stage.
Hi, I'm here. How are
Hola,
you?
Moni.
Good
¿Cómo,
morning.
cómo estás? How are
Muy
you?
bien, ¿y ustedes? Muchas gracias
Super,
por esta
super.
invitación.
You're very welcome,
Thank
Monica. Thank you
you.
for staying here with us. We're going to talk about EB-5. As many of you know, I love EB-5. I've been very involved with the program for several years. Monica, we have been working together for since November last year in a super amazing project that we have. So let's talk about a little bit about EB-5.
Okay,
Monica,
let's
what's
start.
EB-5? Let me
Okay,
see if I
EB.
did my job good
Yeah, I
with you.
know. She's putting me in test now. Don't get me nervous, okay?
Okay,
Okay.
Monica, what's EB-5? Tell
Okay,
us, teach
EB-5
us.
was created by the Congress of the United States, basically to create jobs and bring foreign investment to the United States. In exchange of that, they decided, you know what? Let's all these people that are bringing in money, let's give them the benefit of having the opportunity to participate in this program and allowing them to obtain their residence in the United States. So
Okay.
basically, it's by creating jobs and bringing creating jobs in the United States and bringing money foreign investment to the United States. They're giving they're giving you the opportunity to apply to the U.S. residence.
Okay. So great. That's the
Did I
what
do good
that's
my
the pro.
homework? Okay.
Yes, you did. Yes, you
Okay.
did. So, for how long has the program been active in the United States?
It's been since 1990. Let's do our numbers. I'm sorry, Claudia. I'm very not good at numbers. Uh,
1990. Yeah. It's
yeah.
been open since 1990.
So
When they open the program is actually the program is validated by the Congress of the United
yeah, the
States.
Congress of the United
And
States.
yeah, it dies sunsets. That's the way that they call whatever is approved by the Congress. It sunsets every 5 years. Okay. So it's been reopened and reopened. The only year that it took more than a year without EB-5 was in 2022. Okay, just for fun facts.
Mhm.
And it's as simple as Monica said. We bring investors outside the country. They invest on a previously approved EB-5 project, and the government of the United States is going to give them the green card. Who's them, Monica? When I said it's going to give them the green card, who's them?
It's
The
um
investor?
it's the investor, their family, their close
Mhm.
family. They have to be the people that are involved are let's say mom, dad, children under 21 years old that have not been married yet. So it's all
Okay,
their
so
direct
let's
in.
say I'm the investor and I want to bring my dad. Can I?
No, you can't. It
Can
has
only
to
go
be your
down, right?
spouse and your children under 21 years old.
Perfect. It doesn't go up to parents and it doesn't go to
To
the sides to brothers or sisters.
brothers or sisters or no. It's just your
Okay.
direct. family.
The question that we always get asked, what happened if, like in my case, I've been married several times. Okay. What
Good
happened
for
if I have,
you.
what happened if I have kids? I am the investor and I have one kid with my ex-husband and I have another kid with my new husband. My two
they
kids go apply.
they do, and
Okay.
but it has to be you that are is asking for requesting the EB-5. Okay, if it comes
What
to
about
you,
what about exactly perfect? What about if the husband has a kid with the ex-wife
no, I'm sorry,
and
but
I am the investor?
no, it has nothing
Perfect.
to do with you. I know you love
Exactly.
them; they're very nice. They go all along together, a happy family, but unfortunately, that does not apply.
It has to be only on the line of the investor.
The line of the
That is
investment.
something very important about EB-5. Okay, let's talk about the process of EB-5. Can you tell us how it works? Okay, let's say I decided I'm gonna go with the EB-5. I wanna leave my country. I am from Colombia, but I wanna go and live in the United States. I'm ready. How much is the investment? And
Okay,
how long it's gonna take for me to apply? When I'm gonna get my green card?
okay. So let's start with number one. Number one, you come here to the United States and your family. You're here. You come for vacation. You have a visa that you have how do you call it this? A visa that allows you to come here as a tourist visa. And then you're here and you're like, oh wow, I love this country. I love everything about it. Well, I decide that I want to stay in the United States. Okay, you can, once your period of your visa, 90 days, you go and tell your lawyer, hey, listen, 90 days has passed by. I do not want to leave the United States. I will like to change my status and apply to an EB-5 program. So, okay. So he's going to tell you, great, let me just tell you what are your options. So they're going to come and say there's an amazing project called Smart Brickle, where is approved to give you the EB-5 program, but you need to have 1,050,000. Okay, 1,050,000 is your investment. This investment has to be done for 5 years. Okay, so first of all, you have to have your 1,050,000, or your client has to have your 1,050,000. So once you have your 1,050,000, you have to have in mind that obviously, if you're in the United States, you have a legal status to be in the United States. You cannot have any criminal records, and the funds that are you're providing they're going to be traceable, meaning that you have to let them know how did you obtain this 1,050,000. Okay, now if you're here, you're going to be here, let's say everything goes on, you give the 1,050,000, everything goes great. So this is the process. You're going to be in the country, and between 5 to up to 9 months, I would say a little bit less, you're going to receive a permanent residence. I'm sorry, I that's a mistake, not a permanent. You're going to receive permission to be in the United States to work, and also permission to travel. Okay? Then from there on, it's going to take approximately like 16 months for you to get your permanent resident. Did I make myself clear, Claudia? Did I miss out on something? Please correct me. You're
No.
the queen of EB-5.
No, no, that's perfect. So just to summarize, because this is just to have general information and everybody that wants to have a private information or a private meeting with Monica, Monica is gonna write her information in the chat so everybody can set up a meeting with her. It's very simple. If you are inside the United States as an investor, you can change your status. You are already here in one type in any type of visa, you can change your status. And um, 6 to 7 months are going to have work permit and travel permit. And 24 months since the day they apply, they're going to have the green card. If did you explain the outside process or you want me to go
No,
through it?
I have not. If you can do it from your country. Let's say you're a doctor, you cannot, you're doing it most likely because you want your kids to have a better future, but you cannot leave your country. Yes, can you do it from there? You can. The process is going to be longer. Instead of having your residence in 16 months, it's going to take approximately 2 years.
Okay, perfect. So if you are inside, you're gonna have 6 to 7 months to have a work permit and travel permit. And if you are outside the country, it's gonna take 24 months, more or less. Remember
Mhm.
that this timing is based on USCIS. It's not based on the developer or lawyer or whatever we say. It's based on USCIS, so it's not controllable. Okay, but right now the timing for EB-5 green card is about 24 months. Okay, so that's perfect for the basics. Let's talk about the project money.
Okay, the project it's called Smart Brickle. I know much of you have heard about it. It's an amazing project. It is a project. It's a mixed use. Why do I say mixed use? Because it has a hotel component and it also has a condominium component. Now, the whole project is 3 towers. Tower 1, that's already done. It's fully operating. It's been really incredible. Now we have also Tower 2 that's going to be done by the end of 2025, and Tower 3 that's going to be done by the end of 2026. The whole project allows short term rentals. We are the first ones in Brickell that came up with this concept without having any type of problem that saying that listen, you cannot put it in a short-term rental, meaning like Airbnb, that there's a lot of buildings in Brickell, but they do not allow Airbnb. We are the first ones that came up with this idea with no type of problems, and we're also the first to be delivered in Brickell. So they come completely furnished. You do not have to worry about a thing. You just come, bring your toothbrush, and if you want, you can bring clothes, because there's also 2 blocks away from here is the amazing Brickell City Center. And if you want to change your whole wardrobe, you're more than welcome. So you do not have to worry about anything. Just come and enjoy. Now, if you as an investor allows you to do short-term rentals, meaning that you can do it per night, per week, per month, or if you wanted to do it yearly as well. And you can have it as well once you come and visit Miami for you to enjoy it. So it's an amazing project, amazing location. Like I told you, it's 2 blocks away from Brickell City Center. It's 2 blocks away from the Metro Mover. So for those that want to go to Orlando, want to visit Mickey, you just go on the Metro Rail. It takes you to the Bright Line station, and then from there you're all the way to Orlando. It's also, remember, Brickell has all the amazing restaurants. Yeah, Claudia, please.
Just 1 second because we have a couple of questions.
Yes.
Vivian said they must live in the US once they apply. Vivian, remember they are applying to be an American resident. The law says after you become an American resident, you have to stay in the country for 6 months plus a day because you have to honor that you're becoming an American resident. Second, Susanna is asking the name of the project again. It's a Smart Brickle, and the address, Moni, is?
Yes, the address of our sales center. It's I invite you all to come. It's one. I can write it down. I think it's easier. No, or do you want me to
Yeah,
tell
and
it?
please write down your name and your information and your email so everybody that Now we're gonna say the best thing, okay? Referral agreement for real estate people or anybody in particular that wants to bring a referral investor to the project. Just let's add these two things together. A Smart Brickle has been approved for EB-5. You bring your investor, they invest in the project called a Smart Brickle, and they can get the green card. This is a loan for 5 years. And the referral agreement that any of you can make is $52,000 to bring an investor to Monica. You don't have to do anything. Just bring the investor to Monica, register the investor. Monica is gonna make the presentation. She's gonna want that is gonna guide the client. And as soon as the client is ready to sign and deliver the money to the escrow account, you guys can ask for $52,000.
Correct.
Okay. So are we clear on that? This was just a presentation to generalize how we can do it and how we can make a referral out of this.
Correct. Very
So
important that it's a referral, guys. Like Claudia said, if you have a client and you want to present to them the option of EB-5 program, just bring them. We have an amazing team that can help them and guide them through. We are here to do that job, okay? Just bring them here and we'll do the presentation.
perfect, Monica. So my last question to you, Monica, if you could have a superpower, what
Oh
would
my
it be?
God, I thought I was not going to have. Oh, you know what? I think if I could have a superpower, I would love to eat as much as I want without getting fat.
Okay. I would love to have that superpower too. Okay.
Right? That would
So,
be great.
Moni, thank you very much. Okay.
Thank you for the
Um,
invitation, Claudia. It was a
no,
pleasure.
thank you everyone for tuning in today. I hope to see you all next Tuesday. Master Tactics, Monica, thank you very much for being here with us. Everybody has Moni's information. So I'll see you guys soon. Have a great day from Colombia. Bye.